Imagine you were born in the US, but your family moved away when you were just a baby. You've grown up entirely in another country. You hold that country's passport, and you've never worked a single day on American soil. You aren't a US taxpayer, right? Wrong. In the eyes of the IRS, you are what's known as an accidental American. And underneath that accidental title lies a massive hidden tax trap. See, the United States is one of only two countries in the exact same position worldwide, the other being Eritrea, that enforces citizenship-based taxation. Most countries tax you based on where you live and earn your money. The US taxes you based on the passport you hold or the soil you were born on. If you fit this description, here are the three harsh realities you need to know. First, worldwide income reporting. The IRS demands to see everything. Your local salary, your interest in your everyday savings account, capital gains if you sell your home, even local government bonuses, it all must be reported on a US tax return. You might think, how would they ever find me? Enter FATCA, the Foreign Account Tax Compliance Act. This law forces banks worldwide to scan their systems for anyone born in the US. If they find you, your local bank will hand your financial details over to the IRS. But here is a vital piece of good news. Filing a US tax return does not automatically mean you will owe the US money. Thanks to foreign tax credits and the foreign earned income exclusion, most expats living in countries with normal tax rates can bring their US tax bill down to zero. But, and this is a huge but, doing the paperwork is still completely mandatory. So if you just realized that you were caught in this trap, what do you actually do? Well, you essentially have two choices. You either get right with the law or you legally cut ties. If you want to catch up, don't panic. The IRS knows there are millions of people who genuinely have no idea this law exists. They offer a special amnesty program called the Streamlined Foreign Offshore Procedures. If your failure to file was non-willful, meaning you honestly didn't know you had to file, you can file your last 3 years of tax returns and 6 years of foreign bank account reports, otherwise known as FBARs. Do this correctly, and the IRS will completely wipe away any late filing or failure to report penalties. Your second option is to formally give up your US citizenship, but you can't just throw your passport in the trash. To legally cut ties with the IRS, you have to attend an interview at a US embassy, and you must prove you've been tax compliant for the past 5 years. There is some good news here though. For years, the government charged a staggering $2,350 administrative fee just to process a renunciation. Thankfully, the State Department slashed that fee by 80%, dropping it down to $450. While it removes a massive financial hurdle, the exit tax rules for high net worth individuals still apply, and the paperwork remains strict. The bottom line is this: an expired US passport does not mean you've escaped the US tax system. If you or a loved one are an accidental American, ignoring it won't make it go away. But taking control of it through the proper legal channels will save you a massive headache down the road. Have you or anyone know had to deal with the chaos of US expat taxes? We can help you. Book a US tax clarity call with us today. Email us at hello@usautax.com.